we go straight to the elephant of the day, which is money market fund. I know we have all heard about money market funds. Yeah. People talking about why you need to invest in money market fund, why it's the best investment. And we have seen money market accounts or fund managers giving very, very tantalizing interest rates. And we wonder, why are we missing on these opportunities? You understand that sometimes we don't invest because, one, we are not sure about the investment that people are talking about. And that's where we need to take calculated moves. Before you invest your money in anything, you have to understand that thing. And that's why we are talking about the money market fund, right? The other reason is we are just afraid to invest our money because we fear, what if it crash like the others that I have heard about? That is being risk averse. And every investor has to have a portion, of risk in themselves. So you cannot live in solace, somewhere that is so safe that you never invest your money. Otherwise, you'll not be able to grow your wealth well. So money market funds is a type of mutual fund that invest in low risk short-term assets. What I mean with a mutual fund is this type of an investment that aggregate funds. It pulls money from different investors, you and I. Now, currently here we are a few of us, around 10 people in this chat. Now, if we pull our funds in one basket and then give it to a professional who understand the markets, who understand the investment, I tell them, okay, we have put this fund, take it, invest it for us, and give us a return. That's all about money market funds. That's what we do. Many people in the country, we come up, we pull our resources together and give it and trust our cash with a money market fund manager. They are called money market fund manager, who then invested in short-term investment assets. These short-term assets include things like Treasury Bills. These are short-term government borrowing instruments. They are issued by CBK. Then we have commercial papers. These are short-term borrowing instruments that companies use, to meet their cash flow needs in short-term basis. Then we have fixed deposit. We know the fixed deposit from the banks, where you go and attach your money there. Mostly will give individuals around 6 to 8%. But when they are dealing with fund managers or money market funds managers, they're able to give them better rates because they have more resources. So they'll give them even over 10%. So these three short-term assets are the most synonymous with money market funds, and that is where they invest that money. Once we pull that money, they invest it here, and once they get the return, they share that return with us. So another thing that I want us to understand is something called collective investment schemes. Collective investment schemes, it's what I've just explained. The act of pulling resources together in one basket and then investing it, right? And we understand that the most popular among these is money market fund. These are schemes, including money market fund. We have also fixed income funds. Fixed income funds have also become very popular in the country because we have seen people who are offering money market funds, they are also starting fixed income funds. The only difference is fixed income funds invest their money in fixed securities that are a bit long-term. These fixed securities include things like Treasury Bills. This one can take more than 12 months or 18 months of an investment, and they have fixed income streams. Then we have also equity funds. These are funds that invest in stocks. Equity is stocks. Yeah. When you hear about Nairobi Security Exchange, stocks are being traded there. Now, the equity funds aggregate most of these stocks and then they give you returns. Then we have balanced fund. Balanced funds invest in stocks and government securities. It, it is less risky compared to equity funds because it aggregates these two. Then we have the final one, special funds. Currently, if you go to my LinkedIn, today I spoke about the special funds. I wrote a post about special funds, and uh, these special funds, they invest in diverse portfolio of assets, both locally and externally outside the country. Now we have popular ones called Mansa X Fund, if you have heard about it, and also another upcoming one called Oak Fund. So these are different case altogether. So all these are part of collective investment schemes, right? And money market fund forms the greatest portion of it. I'm going to show you the data based on that. So also it's good to note that CIS, that is Collective Investment Scheme, they are regulated by Capital Market Authority. The same with money market funds. Now we have identified, we have Collective Investment Scheme where all other funds come under, right? And they are all regulated by Capital Market Authority. Now, it's good to note and appreciate that money market fund accounts for 171 billion, right? This is data as at June 30. That is the second quarter that was reported. Now, this data you can get it in collective investment scheme reports are published by the Capital Market Authority. We can see here that the money market is taking around 67.4, followed by fixed income fund. This is another section that is coming up very fast. Then we go to equity fund, 1%, balanced fund, 0.1, and other funds, right, which is taking 10.6%. Now you understand where we position our money market fund. Now, in this collective investment scheme, we have seen that the money market fund forms the biggest portion of 67%. Now, under that, we want to ask ourselves, in this money market segment or the collective investment scheme, we have different investment schemes, or what we call fund managers. And all these names here, I have not exhausted this list. It's huge. They are over 30 that are currently active. But we can see the asset base or the deposits and the market share of all these fund managers under the collective investment scheme. I'll just highlight the top 5. We start with CIC Unit Trust Scheme, Sanlam Unit Trust Scheme, then we have NCBA, then Britam, ICA, Old Mutual, and ABSA. They lead the pack in terms of, the amount of assets, or let's say the deposits held by them. Yeah, so that is very important to appreciate that, because I'm going to tell you where you need to check that number as we go on. So in any money market fund, there are 4 parties involved. And the reason why we have 4 parties is to ensure that the money market fund, they're operating a very solid fund that is that the Capital Market Authority has seen it fit to ensure that they mitigate the risk of operation in this fund. That means the regulation is very steep, and there are 4 parties involved to ensure that these funds run very efficiently. The number 1 is what we call the fund manager. This is a registered company and also licensed by the Capital Market Authority. And this is what we popularly know like Sanlam, CIC, Britam, Tika, Kuza, etc. all the investment firms that you know, they are called fund managers with now the respective names. Now, the purpose of a fund manager is to invest our money that we have contributed in a good diversified portfolio and give us a return. So they take that money on our behalf and invest it. Now we have the second person called the custodian. Mostly they play custodians are bank institutions in Kenya. And this party, they keep the money that we, the investors, contribute before the fund manager can make any investment decision. So this is a party that the fund manager, upon creating a good investment strategy, they subject that investment strategy to a custodian and tell them, okay, custodian, we want to buy treasury bills worth 1 billion. Now the custodian will look into that investment strategy and ascertain that it is in line with the mandate of the fund manager. And then, only then, will they release the money to go and invest there. So the custodian holds into custody our investment, right? And also ensures that the fund manager is only investing in the assets that they have been approved to invest in. Now, the second one, we call them the trustee. The trustee, this money market fund watchdog, right? They keep both the fund manager and the custodian accountable to ensure that your money is well handled, right? So then the fourth one is the auditor. They're able to evaluate the standing of the money market fund statement to ensure that they are reporting its firm and they are giving us a true and fair report based on the operations of the company. So now that we have understood that, we want to see how does money market fund work, right? So how do the money market fund work? This is how it's structured. Once we pull our money there as investors, we say that they are going to invest it in the market. Now, when they invest it, it means they are going to get some return. Now, they are going to share this interest is distributed back to the investors, right? Another thing we need to note that when they distribute this interest back to us, the interest is deposited into our accounts. We say interest is earned daily, but compounded monthly. This interest that is deposited in your account will start compounding every month. And this is one of the most powerful strategies that money market fund employ, the power of compounding interest. This is where your interest also starting earning interest. Yeah. So your principal money that you deposited in the fund is earning interest, and also the money that it gets, which is the interest earned, also starts earning interest every month, right? So this is a very powerful strategy that the money market fund employs compared to other avenues. Yeah, when you go to other avenues like bank deposit, they don't have compound interest growth. They have something we call fixed interest growth, where they take your money, if it's 10,000, multiplied by 5%. If they're giving you first 5% return, then the money is deposited into your account at the end of the year. So it has not grown through compound interest every month, right? So the same case with treasury bills and bonds, they are going to deposit your interest into the bank. It's for you to know whether you are going to reinvest that money or just consume it. So that is the advantage of money market fund. Now, another advantage, apart from the compounding effect, is the liquidity. When you deposit your money with the money market fund, you can access that money within 48 hours. You just need to write an email, money market fund, to your counterparty there. I would like to withdraw X amount of money, and they're going to deposit that cash into your bank account or through even M-Pesa. So liquidity becomes very important when it comes to money market fund. And that's where it beats uh, other sources or other investment opportunities like fixed deposit, boards, or even circles. Because of this liquidity, you can be able to access your money easily. Another thing is it guarantees capital preservation. Capital preservation is where you know that your principal amount, the amount that you invested with them, you are going to get it back. It doesn't matter whether the market goes up or down, your money is preserved. You can earn less interest, but you are guaranteed that if you deposited 50,000, by the end of the year, your 50,000 is going to be there. And of course, it will have grown a bit. So also steady income. Now, money market fund, we call it a low risk investment opportunity, and they also provide stable return. You can be able to predict it. So the average return for the money market fund over the last 10 years has been between 8% and 10%. That is the average return. This is quite predictable, and you can be able to ensure that when you invest your money in the money market fund, you're going to get such returns in your account, right? Another one is professional management. We said that the fund managers handle investment decisions that are able to maximize your return at the same time looking at the risk factor. These are people who understand the market, who are qualified in the investment arena to be able to, multiply your money that you deposit with them. So another thing is low barrier entry. You can even deposit 100 with a money market fund. So unlike other investment opportunities where you have to, contribute maybe 10,000, 50,000, 100,000, with the money market fund, you can deposit 100 bob every day. So low entry barrier. That's also an advantage with that. Something else is diversification. We saw that money market fund, they invest in short-term asset, treasury bills, and we also saw the fixed deposits, and the other one is commercial paper. So these are three investment, and once they diversify through them, they are able to lower the risk of the investment. We have highlighted the compound interest growth. The other one is inflation hedge. Inflation is consistent increase in the price of goods and services, within a specific period. Now, currently, our inflation is 2.7%. You can see the money market funds are offering an average of even, let's say, 10%. So you can see we are beating the inflation by the money market return. We said over a period of 10 years, they have been giving 8% to 10%. So the worst that the inflation rate for Kenya has ever gone is, I think, around 9%. So money market fund will still beat inflation. So that's quite a good advantage. Now, we have identified why money market fund is a good investment, and we have understood the money market. Now, we have over 29 money market fund managers in the country. How do we choose the best one, right? So there are critical areas that we need to look into. Now, most people will go with the interest rate. That has been one of the most asked questions. That now, since that I've seen this money market fund is giving us the best interest, I want to invest with them. But I usually tell my people to hold, just put some, breaks to that. There are other evaluation criteria that you need to check before you give your money to any money market fund manager. And the first one is performance history. How has the performance of this money market fund been for the past 5 years or even 10 years? Is it consistent? Have they been delivering? Right? Another thing is management fee. Now, we give our money to this fund manager. Of course, we have to pay something. And this something is what we call management fee. It averages from 2%, but there are some money market fund that will give 1.5%, will charge 1.5% as management fee. So the average in the industry is usually 2%. Now, another thing is fund size and reputation. The fund size, you remember when we were saying the collective investment scheme, and we outlined based on their deposits. Now that's where the fund size is. Now you want to put your money where other people are putting their money. The larger it is, the reputable it is, the more secure your funds are, and you can rely on them, right? So the other fund managers will offer very huge interest, but they have been in the market for just maybe 3 years or 2 years. Now, the other fund managers who have been in the market for over 10 years or 15 years, but they're offering just average returns in the market. Who is the best? Would you go for the 3 year guy who have just come into the market, or the 15-year fund manager who have been there? So that is a question. The other thing is transparency. Choose a fund manager who provide clear and regular report on the performance and fees. There's something that we call a fact sheet. Every fund manager should be able to facilitate that. It shows where are they investing their money, what proportion, what has been their return on investment, what is also their diversification, right? So it details everything around that fund. So the first thing to ask for any fund manager before you invest, kindly give me a fact sheet to ascertain, your operation. The other one is they have to be regulated by the Capital Market Authority. And if you want to know if they are regulated, go to the Capital Market Authority website and check there. The other one is ease of use and access. Can you be able to access your money when you need it? Do they have user-friendly platform, right? What about the sign-up process? Is it a hassle? Do they take 1 week before you get your account? Can you be able to open your account online, right? How easy is it to open your account and also access your money? Now, as of 25th October last month, this was an annual return. These are all the fund managers. They are 29 in number that mostly published by Capital Market. Give you a gross return. It's up to you to check the net return. And the net return is you take the gross return, you less the withholding tax that is 15% of the return, and management fee, which can be 2% or 1.5%. Now, I have calculated the net return here. You can see, like the first one, Cyton offering 18%, 50, you can see the net is 15%. So don't be persuaded by the 18%. Now you can see all these fund managers, 16, are offering all these great returns, the ones that are offering 15%. plus 2% or 1.5% based on their management fee. So that is the list schedule of different fund managers and how much they are offering in the market. So why do you need a money market fund? Now we know everything about money market fund. So where does it come in? One thing that you need to note is money market fund is a tool. It is an investment vehicle aimed to help you achieve your financial goal. You have to note that money market fund, among other investment opportunities, they are just tools to facilitate your goals. So the first thing that you need to identify is, what is my financial goal? And now, here are the goals that I have outlined, that if you want to build an emergency fund, money market fund becomes one of the tools that you can use to save your money there. Why? It is liquid enough, and if you have an emergency, you're able to access your funds within 48 hours. Emergency fund is one goal. Now, another one is short-term saving goals. Now, could be you want a vacation, a wedding, or maybe you want to do a big purchase, right? Or maybe, or something. These short-term goals, you can save your money there in the money market fund. It means that if something is upcoming for the next 3 months, you can be able to save it there and also access it. When your money is there, it's growing, based on the net rates that we have seen, and you're also going to access it in 48 hours and be able to do whatever you wanted. Education fund. Now, if you are a parent or individually, you want maybe in 1 year or even 2 years or 7 months to go back to school, or you are saving for your children education fees, money market fund is a good avenue, right? It's good, it's better than saving in a bank for the same. Now, another one is saving for large purchases. Maybe you want to buy a car, a sofa, or maybe you want a different project that you are starting, or you want to boost your business. That is something you can deposit your money into and be able to do those large purchases. Sorry for that. I think, let's go to the next. All right. I think those are the most critical goals that you can use with the money market fund. It is not limited to these goals. So you can, any other different goals that you have, each and every one of us have specific financial goals and needs. So you highlight, you see, okay, money market fund, it is liquid enough, it is preserving my capital, my money is growing through compound interest rate, and I want to do A, B, C. So is this a good tool to use to save my money? Once you identify that, you can be able to save your money there. Now, another thing, money market fund, what are the risks associated with them? No investment in this world that has no risk. So even money market fund, as much as it is a low risk investment opportunity, it has some risk, like inflation risk. Sometimes maybe inflation can be more than 10%, and your money market fund is only making you 8%. That means your money will be losing value in that money market fund. So that is one risk. Another one is interest rate risk. When the money market rates drop, like currently, we're expecting that the returns that you have seen, me highlighting them as at 26 October, they are going to drastically drop. Why? The avenues where money market fund invest their money so that they can be able to give you return. These avenues, things like Treasury Bills, they are declining in interest rate. That means money market fund, they are going to invest in these avenues and they are going to get low returns. which also means they are going to give you low returns, and this is an interest rate risk. The credit risk is whereby they invest in commercial papers and maybe the company defaults, right? That is a credit risk that can also impact the fund stability. Liquidity risk, assuming that 100 or 1,000 people want to withdraw their money today, it can become hard for a money market fund to satisfy that demand. So sometimes it can suffer liquidity risk, but this is very rare because money market fund, they invest their money in very, very liquid investments. So another one is currency risk, especially for money market funds that invest in USD or United States dollar, so they can face currency risk. As we had seen lately, our currency vis-a-vis the USD has been fluctuating much. So these are the 5 risks that are synonymous with the money market fund. So sorry for this. This is a continuation of the importance of the goals that you can use with the money market fund, alternative to saving account, business cash reserve, and cash management tool. These are self-explanatory. So now that we have identified that, I want to give you some case examples. How much can I earn from money market fund? Now, if you deposit to 2,500 per month at a rate of 12% for the next 10 years, this is what you are going to get. You can see your actual contribution will only be 300,000, but the return will be 225,000. You see, this is what we call the power of compound interest. You have only contributed 3,000, but your money has grown through compound interest by 225,000. Another one is, what if you contribute 5,000 per month? At the same rate of return, you'll have contributed only 600,000 in 10 years, but the return will be 451,000. So your money market fund account will be 1,051,000, right? So it gets better when you increase your contribution, 10,000. You can see your actual contribution, 1.2 million, return 903,000, getting 2.1 million. So you can see the power that money market fund can give you. And now it gets better. The more the years your money is invested there, the more it doubles, right? So these are just case examples on how you can leverage that and how much you can get. So how do you get started with money market fund? It is simple. You just need your national ID, KRA PIN, passport photo, and a recent bank statement. If you don't have a bank statement, you can do a front side ATM card of your ATM card, a photo of that. Make sure all these are in PDF and other formats. Now, the reason why I stated the above is to show you an example of a fact sheet. This is a link to that. I think I can be able to share this through the chat box. Also, Sanlam Money Market fact sheet is there. And also with Sanlam Money Market file, you can be able to open an account. The reason why I am recommending Sanlam Money Market file is because that's what I use. And it meets all the checks that we have indicated. It is the second biggest collective investment scheme in Kenya from CIC. It will give you a good average return on investment. 3, it has one of the lowest management fee, that is 1.5. 4, you can easily open your account even through an online portal. 5, the access accessibility of your money is quite simple. When I'm withdrawing my cash from there, in fact, they usually give back my cash even before a day ends, several hours. If you wanted through M-Pesa, they're going to give you. If you wanted through your bank, they're going to deposit there. So that's what I use. If you're looking for a money market fund account, that's one of the options. We have seen that we have 29 options. You can just go and open an account from the other option. But this is what I use. It's efficient. And if you have any trouble opening an account there, I can always help you with that because I have experience with them. So, and that marks the end of our presentation.